Valuations across the entirety of the tech sector are up. I think financial technology, has benefited disproportionately because COVID has proved to be the ultimate use case of a number of applications of financial technology. And so that has created an accelerant to these businesses. And so their financial performance has justified a recalibration of the valuation paradigm. I think it is a permanent recalibration because it speaks to a fundamental shift in the way both the consumer as well as the industry consumes technology and the importance of technology going forward in the evolution of financial services. Fintech provides the ultimate combination from an investor perspective in that it delivers growth, it's stable and recurring, and there's not a lot of downside. We saw the Affirm IPO, which was a market leader in the buy now, pay later space. We saw the IPO of Rocket Mortgage, and we were extremely pleased and fortunate to be a book runner on the IPO Shift4, which was really the relaunch of the IPO sector. People want to create a demarcation line between SPACs and IPOs, but at the end of the day, they are both capital markets transactions whereby the goal is to properly fund an enterprise in the public market and assess the right clearing price for the company from a value perspective and for investors to generate alpha. A company that is evaluating an IPO by definition should be evaluating a SPAC transaction. If you look at the universe of SPACs, a large proportion of them have either a tech or a specific fintech bent to them. The quality of the SPAC sponsors has increased exponentially. The ability of the market to price growth through a SPAC vehicle has developed materially. And then the third piece being investors who look at the SPAC as being a more efficient way to establish a meaningful shareholding in a company that they like, as opposed to a traditional IPO where even the biggest allocation usually leaves a shareholder wanting more. If you look across the board, RBC is seizing leadership from a technology point of view. One, because it's imperative as a means to support our growth, but also two, I think it ties very well into our ESG initiatives, whereby technology is the ultimate way to democratize financial services across the board. I do believe that there is more work to be done in leveraging technology to create a more inclusive environment for the underbanked or unbanked. There is a social and economic imperative in ensuring that we foster technology that provides full inclusion to people for financial services. The B2B sector is the sector that has been the most resistant to change. The means of transacting between enterprises are surprisingly archaic. As problems are solved, there'll be new opportunities uncovered that will create further and faster innovation. Payments will continue to be an area ripe for consolidation and extensive M&A activity, especially as we see new companies move into the public markets and we see larger companies that now need to acquire technology to sort of offset the speed of development of some of their more nimble competitors. I think there's no turning back. Financial services is now a digitally consumed and digitally delivered product. I think the better question to ask is, will we see an even greater acceleration of the adoption of fintech in the near to medium term, as opposed to any step back? And my assumption, my strong view is that we will see that acceleration.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.